January 3rd, 2026. Nicolas Maduro, the untouchable dictator of Venezuela, captured by the United States right in the middle of Caracas, a global shockwave. The media calls Operation Absolute Resolve a victory for democracy, a liberation, a perfect ending to a decade of suffering. But what is the truth? This was not a military intervention. This is a hostile corporate takeover. The United States didn't just arrest a dictator, we effectively seized control of 303 billion barrels of proven oil reserves. That is more oil than Saudi Arabia. While the media chatters about narco-terrorism, Wall Street is watching the only chart that truly matters, the price of heavy crude and the collapse of China's $60 billion debt. So who really gets paid? Who gets wiped out? And why is this regime change actually just a massive business deal? I am Pot. I have spent the last 48 hours following the money trail, so you don't have to. If you want to understand the economics of war before the market reacts, hit that subscribe button right now. Let's dive into the financials behind Operation Absolute Resolve. To understand the money, you first have to understand the method. Because this wasn't just a military raid, it was the most expensive human asset acquisition in history. It started at 3 a.m. on January 3rd, 2026. The sky over Caracas didn't just light up with fireworks for the new year. It lit up with precision airstrikes targeting the communications grid at Fort Tiuna. Most people thought Maduro was safe in the Miraflores Palace. That would be the obvious choice. But U.S. intelligence knew better. They knew exactly which bunker in Fort Tiuna he was sleeping in. How did they know satellites, drones? No. They knew because someone sold him out. Sources confirm that the CIA had successfully flipped insiders within Maduro's own security circle months ago. The United States Department of State had raised the bounty on Maduro's head to $50 million back in August 2025. Think about that. $50 million. $50 million. In a country where the currency is worth less than toilet paper, loyalty has a price tag. And Uncle Sam just paid it. The operators on the ground were Delta Force, the tip of the spear. In less than 30 minutes, they cut through the defenses and dragged Maduro and his wife Celia Flores out of their bedroom. He was flown to the USS Iwo Jima waiting offshore and then straight to New York. But here is where the corporate takeover strategy really shines. Legally, you cannot just kidnap a foreign president. That is an act of war. It violates every international law on sovereign immunity. So how did the US get away with it? They rebranded the product. They didn't arrest a president. They arrested a narco-terrorist. By labeling Maduro as the head of the Cartel of the Suns and a threat to U.S. national security, the Trump administration bypassed international law entirely. And immediately after the raid, President Trump dropped the mask. He didn't promise elections. He declared that the U.S. would run the country. He even left Delcy Rodriguez, Maduro's own vice president, in charge as a temporary figurehead, essentially keeping the old management team, but changing the CEO to someone who answers to Washington. This confirms exactly what I suspected. This isn't about justice. You don't run a country unless you want what is underneath it. And what is underneath Venezuela is the only asset on Earth worth risking a world war for. Let's look at the prize. So why Venezuela? Why risk international condemnation and a potential quagmire for a country whose economy has shattered into a million pieces? The answer lies 3,000 feet underground. Venezuela sits on the largest proven oil reserves on the planet. We are talking about 303 billion barrels of oil. To put that into perspective, that is more than Saudi Arabia. It is enough to power the entire world for decades. But here is the catch, and this is the technical detail that most mainstream media misses. It is not just about the amount of oil, it is about the type of oil. Venezuela produces heavy crude. It is thick, sludge-like oil that is difficult to extract and refine. Now you might think, why would the US want the bad stuff? Here is the irony. The United States is the world's largest oil producer thanks to the shale revolution, but we produce light, sweet crude. However, the massive refineries along the U.S. Gulf Coast, billions of dollars of infrastructure in Texas and Louisiana, were engineered decades ago specifically to process heavy crude. For years, U.S. refineries have been starving for this heavy oil. When we sanctioned Venezuela, we cut off our own supply chain. We forced our refineries to buy heavy crude from Canada or, ironically, Russia at a premium. This invasion effectively reconnects a broken supply chain. It is a marriage made in hell between American industrial capacity and Venezuelan resources. By taking direct control, the U.S. secures the exact feedstock its refineries need, cutting out the middlemen and the geopolitical premiums. But getting the oil out of the ground is a different story. Under Maduro, the state-run oil company PDVSA was gutted by corruption and mismanagement. The infrastructure is rotting. The pipelines are leaking. Production has collapsed to less than 1 million barrels per day. This is where the new management comes in. President Trump has already signaled that U.S. big oil is coming back. Chevron, which is the only U.S. major that still has a footprint in the country thanks to special licenses, is poised to be the biggest winner. But they won't be alone. ExxonMobil and ConocoPhillips are likely drafting their return strategies as we speak. This isn't just about drilling, it is a massive reconstruction project. Analysts estimate that it will take between $80 to $100 billion in foreign capital to restore Venezuela's production to its potential of 3 million barrels per day. That is $80 billion of contracts, equipment, and services. For U.S. oil services companies like Halliburton or Schlumberger, Venezuela just became the biggest construction site on Earth. And here's the deflationary bomb that should make you pay attention. If the U.S. succeeds in fixing the pumps and flooding the market with Venezuelan oil, we are looking at a massive supply shock. Analysts at Goldman Sachs and other investment banks are already forecasting that if Venezuelan supply comes back online, oil prices could crash below $60 per barrel in 2026. For the average American driver, this is great news. Cheap gas is the ultimate tax cut. It crushes inflation, which has been the biggest headache for the U.S. economy. But for the rest of the world, it is a financial weapon. Russia needs oil to be above $60 to fund its war machine and balance its budget. If Venezuelan oil floods the market and drags the price down to $50 or $60, the Russian economy doesn't just stumble, it breaks. So by seizing Venezuela, the U.S. isn't just getting cheap gas. It is defunding its geopolitical rivals without firing a single shot in Europe. However, there are two other players who just lost billions in this deal, and they are not going to walk away quietly. Let's talk about the losers. While champagne corks are popping in Houston and Washington, there is absolute panic in two other capitals, Beijing and Moscow. Because when Delta Force kicked down the door in Caracas, they didn't just capture a dictator. They effectively lit a match and burned tens of billions of dollars of Chinese and Russian investments. To understand why we have to look at who was keeping the Maduro regime alive, it wasn't the Venezuelan people, it was foreign creditors. Over the last decade, China has loaned Venezuela more than $60 billion. This wasn't charity. It was a strategic loans for oil deal. China builds the infrastructure, China lends the cash, and Venezuela pays them back in crude oil for the next 20 years. Russia was playing the same game. Moscow pumped billions of dollars into Caracas, supplying weapons and cash to keep their Latin American ally afloat. They bet everything on Maduro. And on January 3rd, they lost that bet. Now you might be thinking, wait, a country is still a country. Even if the president changes, the new government still has to pay back the national debt, right? Usually, yes. If a new president takes over in France or Brazil, they honor the old debts. That is how the global financial system works. But this is where the United States is about to deploy a financial weapon of mass destruction. It is a legal concept called odious debt. This is the nightmare scenario for Xi Jinping and Vladimir Putin. The legal theory of odious debt states that if a dictatorial regime borrows money, not to help the people but to oppress them or enrich themselves, then the people are not responsible for paying it back. Think of it this way. If a thief steals your credit card and uses it to buy a gun to rob you, are you responsible for paying the credit card bill, okay? The new U.S.-backed interim government led by figures cooperating with Washington can simply look at the $60 billion owed to China and say, we aren't paying this. Maduro used this money to buy tear gas-filled prisons and line his own pockets. This is illegitimate debt. This isn't just theory. This is a very real possibility discussed by legal scholars at places like the Harvard Kennedy School regarding Venezuela's restructuring. If the U.S.-run administration declares these debts, odious China's $60 billion investment goes to zero overnight. This is a financial masterstroke. The United States doesn't need to fire a missile at Beijing to hurt them. By seizing Venezuela, they can legally delete a massive chunk of their rivals' assets. For China, this is a catastrophe for their Belt and Road Initiative. It sends a terrifying message to every other country taking Chinese money. If your government falls, your debt to China might just disappear. For Russia, it is even worse. They didn't just lose the money, they lost their strategic foothold in the Western Hemisphere. They can no longer park nuclear-capable bombers in Caracas or use Venezuela to threaten the U.S. mainland. And while the state-owned creditors in China and Russia are getting wiped out, guess who stands to make a fortune? The private bondholders on Wall Street. This is the twist. While Chinese debt might be canceled, American hedge funds who bought Venezuelan bonds for pennies on the dollar are betting that they will get paid. Why? Because the U.S. government wants to integrate Venezuela back into the Western financial system. To do that, you have to play nice with Wall Street even if you stiff Beijing. So we have a situation where the U.S. military secures the asset, U.S. oil companies manage the cash flow, and U.S. investors collect the profits while our geopolitical rivals hold the empty bag. But this isn't a guaranteed win. There is a massive risk. We are treating a country like a casino, and the house doesn't always win. Because there is a shadow economy in Venezuela that we haven't talked about yet. A $60 billion black market that doesn't care about oil prices or bond yields. And breaking it could cause chaos that no amount of money can fix. Let's look at the hidden economy, when the dark money stops. If you think oil and bonds are the only things moving in this story, you are only seeing the tip of the iceberg. While investors in New York are popping champagne, there is absolute panic happening in the dark corners of the Latin American financial system. Why? Because Operation Absolute Resolve did not just arrest a president, it severed one of the biggest arteries of the global black market. We are talking about dark money. To understand this, we need to look at the indictment released by the United States Department of Justice. They do not describe the Maduro administration as a failed government. They describe it as a criminal enterprise known as the Cartel of the Suns. According to Washington, this is not just about smuggling. This is state-sponsored narco-terrorism. They accuse the regime of using national infrastructure from military air bases to shipping ports to traffic tons of cocaine into the United States. So how does this affect the economy? Do the math. When a regime is banned from the global banking system and cannot use SWIFT, they cannot move money through normal banks. So where do the tens of billions of dollars from these illicit activities go? They flow into the shadow banking system and cryptocurrency. For the last decade, Venezuela has been a massive gray zone. Financial experts believe that billions of dollars in cash and cryptocurrencies like Bitcoin and Tether have been used to settle underground transactions, completely bypassing sanctions. But on the morning of January 3rd, when Delta Force stormed Fort Tiuna, that flow of money stopped dead. This is a massive liquidity shock for the underworld. First, consider the crypto assets. When the leadership is arrested or forced to flee, the private keys that hold billions in digital assets can be lost forever or frozen by international exchanges, cooperating with U.S. authorities to hunt down the funds. Second, watch the domino effect in Latin America. The dark money from Venezuela does not just sit in a vault. It flows into luxury real estate and Miami investment projects in Panama and businesses in Colombia. When the source is cut off, countless money laundering operations will collapse because the capital has dried up. For the legitimate economy, this is good news in the long run as it cleans up the financial system. But in the short term, it creates chaos. Smuggling networks, informal money transfer channels, and the black market in Caracas will be paralyzed. And here's the biggest risk that almost nobody is talking about: the power vacuum in the underworld. When you take down the Cartel of the Suns, who fills that void, history from Mexico and Colombia teaches us a brutal lesson. When a kingpin falls, a bloody war erupts between smaller gangs fighting for territory. If the United States cannot control the security situation, Venezuela could shift from an isolated state to a lawless paradise for new international criminals. And if that happens, extracting 303 billion barrels of oil will become impossible. So does the United States have a plan to deal with this chaos, or are we walking into the same trap that has destroyed empires before us? Let's analyze the final risk, the graveyard of empires. On paper, Operation Absolute Resolve looks like the perfect heist. The United States removed a hostile CEO, seized the assets, and installed a friendly board of directors. The spreadsheet looks green. The oil revenue projections are massive. But history has a nasty habit of ruining perfect plans. We have tried this before. We have seen this movie. And unfortunately, it usually ends with a horror scene, not a victory parade. If you are thinking about betting your life savings on the new Venezuela, you need to look at the 7 lessons of regime change that every general knows, but every politician seems to forget. Lesson 1. The Iraq Trap. In 2003, we thought removing Saddam Hussein would turn Iraq into a stable democracy that pumped oil for the West. We were wrong. Removing the strongman didn't bring peace. It created a power vacuum. And in that vacuum, monsters were born. We traded a dictator for ISIS. Venezuela has the same problem. Maduro wasn't ruling alone. He was supported by colectivos, armed paramilitary gangs that control entire neighborhoods. With Maduro gone, these gangs don't just disappear, they become warlords. If the US military has to fight an urban guerrilla war against thousands of armed gangs in Caracas, the oil pipelines will be blowing up every week. You cannot pump oil in a war zone. Lesson 2. The Libya Nightmare. In 2011, we helped overthrow Muammar Gaddafi. We thought we were saving the people. Instead, Libya became a failed state, a lawless wasteland where human slave markets operate openly today. The risk here is that we turn Venezuela into a Libya on the Caribbean. This brings us to the Bay of Pigs lesson from 1961. When you destabilize a country on your own doorstep, the chaos doesn't stay there. It washes up on your beaches. If Venezuela collapses into civil war, millions more refugees will flee. They won't go to Europe, they will walk to the US southern border. The economic cost of a new migration crisis could wipe out any profit we make from the oil. Lesson 3. The Napoleon Error. In 1804, Napoleon kidnapped a duke from a neutral country because he thought it was necessary for security. It was a tactical success, but a strategic suicide. The famous quote from that time was, "It is worse than a crime. It is a mistake." By kidnapping a head of state, the US has united the world against it. Look at the reaction. It is not just Russia and China. Even our friends in Brazil and Colombia are furious. They are terrified. They are thinking, if the US can do this to Maduro, who is next? When you break international law, you become isolated. And in a global economy, isolation is expensive. Lesson 4. The Iran Blowback. This is the most dangerous lesson for the long term. In 1953, the CIA overthrew the leader of Iran to protect British oil interests. It worked. We got the oil. We got the friendly Shah. But we also planted the seeds of hatred that exploded 25 years later in the Iranian Revolution. We created a radical enemy that haunts us to this day. We might get the Venezuelan oil today, but by humiliating a nation and installing a puppet government, we might be creating a radicalized generation that will hate the United States for the next 50 years. The synthesis, the occupation question. So here's the final question for the investor. Is the United States ready to occupy Venezuela for 20 years? Because that is what it takes. You cannot just run a country from a laptop in Washington. You need boots on the ground. You need billions of dollars in aid. You need to rebuild schools, roads, and hospitals. If the U.S. public gets tired and pulls out in 2 years, Venezuela collapses. The oil stops flowing. The Chinese debt comes back, and the perfect trade goes to zero. So is this a liberation or is it a liability? So what happens next? Will businesses be reconstruct? So we have talked about the raid, the oil, the debt, and the risks. Now let us talk about the future. What happens the day after the smoke clears in Caracas? We are looking at a scenario that Wall Street is quietly calling Iraq 2.0. But this time they hope the ending is different. The narrative is simple. Venezuela is broken. Its infrastructure is rotting. Its power grid is failing. Its oil rigs are rusting into the ocean. To the average person, this looks like a tragedy. To the financial markets, this looks like the biggest distressed asset opportunity of the century. We are entering the era of the Reconstruction. And the leaders of this new era will not be politicians. They will be CEOs. President Trump has already signaled that American big oil is not just invited back. They are expected to lead the charge. First in line is Chevron. They are the only U.S. major that kept a foothold in the country during the sanctions. They have the staff, the maps, and the logistics already in place. While other companies are still booking flights, Chevron will be turning the valves, but they won't be alone. ExxonMobil and ConocoPhillips, who had their assets seized by Hugo Chavez decades ago, are now looking at a potential homecoming. But this time, they aren't coming back as guests. They are coming back as the new managers of the country's GDP. The estimates are staggering. Analysts believe it will take between $80 and $100 billion of capital just to restore Venezuela's oil production to its previous glory. That is $100 billion of contracts. Who gets those contracts? This is where the investment opportunity gets real. It is not just about buying oil stocks. It is about the pick and shovel play. To fix the oil fields, you need services. Companies like Halliburton and Schlumberger could see their order books explode. To fix the roads and bridges so the oil trucks can move, you need heavy machinery. Watch stocks like Caterpillar. To rebuild the power grid so the lights stay on, you need engineering giants like General Electric. For the stock market, this is a massive stimulus package disguised as foreign policy. And there's always but we have to ask the uncomfortable question. Will these companies be greeted as heroes saving a starving nation? Or will they be seen as invaders looting the country's natural resources? This is the Iraq risk. In 2003, companies like Halliburton went into Iraq expecting a gold rush. What they got was IEDs, sabotage, and a 20-year insurgency. If the Venezuelan people see American trucks rolling in and feel like they are being occupied, the security costs will eat up all the profits. Furthermore, we cannot ignore the human element. The instability is not over. If the reconstruction is too slow, or if the money only flows to U.S. corporations and not to the hungry people on the streets of Caracas, we will trigger a new wave of migration. Millions of Venezuelans might decide that liberation is just another word for chaos and head north to the U.S. border. This would create a political crisis in Washington that could force the U.S. to pull out, leaving investors holding the bag. So the reconstruction trade is high reward, but it is also maximum risk. You are betting that capitalism can fix what socialism broke before the gunfire starts again. So where does that leave us? So what is the final verdict on Operation Absolute Resolve? The media will tell you this is a victory for democracy. The politicians will tell you it is a victory for justice. But as investors and analysts, we have to look at the balance sheet. We have acquired the world's largest oil reserves. We have crushed the influence of our geopolitical rivals in the Western Hemisphere. And we have potentially secured cheap energy for the American economy for the next decade. That is the bull case. But the bear case is just as strong. We have taken ownership of a broken nation. We have inherited billions of dollars in bad debt. We have risked turning a humanitarian crisis into a 20-year occupation that could drain the U.S. Treasury just like Iraq and Afghanistan did. This is not a risk-free trade. This is the biggest leverage bet in American history. If it works, we reset the global energy market. If it fails, we create a failed state on our own doorstep. The only thing that is certain is that the old world order is gone. The rules of sovereign immunity have changed, and in this new game, oil is thicker than blood, and debt is just a weapon by another name. Now I want to hear from you. This is the debate of the decade. Do you think Operation Absolute Resolve was a necessary move to secure American energy independence? Or was it a dangerous overreach that will backfire? Are you buying oil stocks, or are you buying gold in a bunker? Let me know your thoughts in the comments below. I read every single one of them. If you want to understand the economics of war and how to protect your portfolio, when the world goes crazy, make sure you smash that like button and subscribe to the channel. We analyze the money behind the headlines so you don't get left behind. Thanks for watching, and I will see you in the next one. And I am Pot Wall Street.